here we are looking at the correlations of Bitcoin price to two of the kind of major macro indicators out there. On the left-hand side is the relationship between Bitcoin price and inflation expectations. The inflation expectations are defined as the break-even rate, inflation rate between the 10-year treasuries and the 10-year inflation-protected treasuries. So this is really the market implied inflation expectation. And it's really interesting that since the summer of last year, the relationship has been quite tight in that Bitcoin is trading up when inflation expectations go up. And when inflation expectations start declining, Bitcoin starts selling off. There's a regression underneath it, and it's actually fairly tight regression. The R-square is well north of 50%. On the right-hand side is the similar relationship, the comparison of Bitcoin to S&P 500. And I think what's kind of interesting is that the relationship here is not as tight as with the inflation expectations. And if anything, Bitcoin price tends to lead stock prices. And certainly that's what it has done in the second half of 2021. And the R-square on this relationship is way south of 50%. So there's a lot of people out there, and in general, there's this narrative that crypto is just trading together with stocks, and it's just another way to get exposure to stocks. Well, the data doesn't really seem to be supporting that. It really is supporting more the idea that crypto is still trading very much like a monetary asset and is responding more to monetary expectations than it is to general sort of tech market psychology. But in any case, I think that we're seeing the thumbprints of macro hedge funds investors in this market. And again, historically, the relationship between these variables and Bitcoin prices has not been all that tight. So this is a new development.